Hey guys, welcome to the Smart Money Concept Accelerated Learning Course, episode number 5. Today, I'll be teaching you guys change of state delivery, otherwise known as a CISD. And then I'll be teaching you guys higher time frame narrative. And then after that, we can combine the higher time frame narrative with the lower time frame and frame a possible entry. So without further ado, let's get right into it. All right, so a change in the state delivery is when price shifts from a buy program into a sell program, or from a sell program into a buy program. Now, we will see these occur after price is either taken buy side liquidity or sell side liquidity. It's an algorithmic signature. I'm going to show you guys exactly what it looks like in a second here, but pay attention to this. So here, we've taken out a level of sell side liquidity, and a change in the state of delivery is when we get a close above an order block, seen right here, over the open of the order block. The wick does not matter in this scenario unless we would use that to refer to later in price to use this as an order block. But for the change of state delivery, right there would be our change of state delivery, where we are now pushing higher and seeking higher prices. This right here makes it a high probability change of state delivery because we have a fair value gap inside of it, where price then comes back down, respects it before pushing higher. So a change in state delivery is a shift from a buy program into a sell program, or a shift from a sell program into a buy program, making that close above or that close below an order block's open. Here in this example, we're looking for price to come from a buy program into a sell program, and where we'd be able to predict it is after we take a level of buy side, which we do. We want to get a close below the series of order blocks, can also be just one, which we get, price goes lower, comes back up, respects it, and then pushes lower, seeking out sell side liquidity. All right, so now I'm going to be teaching you guys about daily narrative. Every single time that you come into the markets, you're going to need to obtain a daily narrative to understand where price is going and where you could take a possible entry. So you're going to start from the weekly time frame, down to the daily, down to the 4-hour, down to the 1-hour, and then eventually down to the 15, just to frame an idea of where price is going. So what I want you guys to understand is that every single thing that I've taught you so far is fractal. What I mean by that is it can be applied to every single time frame that I've taught you. So for instance, if we're in a 4-hour buy program, then we are going to respect 4-hour fair value gaps. Understand? And if we're in a 1-hour buy program, we're going to respect 1-hour for value gaps. If we're in a 1-hour sell program, we're going to respect 1-hour for value gaps, and so on and so forth. And we could take that and then fractalize that and use that as a way to obtain an entry by looking at displacement away from highs, away from lows, as well as the price delivery arrays that I've taught you. So let's see a live example of what that actually looks like. So now taking that higher time frame narrative, and now we're going to combine it down the time frames, fractalizing it into a lower time frame where you can then take an entry. So starting from the weekly, what can I see? That price is being held by this weekly order block that it has tried twice to go past, and it has not. So now we can go on to the daily. Same thing here. So I'm expecting higher prices. Go down to the 4-hour. So here we had price come down, take sell side, push higher, fail swing down to this low. We did not take that low, took this low instead and pushed higher. We also displaced away from this high where we are at now. So with this, now I can come down to the 1-hour, and here we have a 1 hour change in state of delivery. We also have a fair value gap within that change in state of delivery, which I would like to see price move away and then come back down, respect it before pushing higher. This fair value gap is also in a discount. Why is it in a discount? Because it overlaps right there. See that? So now we could fractalize that and look down here to when price comes into the fair value gap on the 15. And you see that price taps it, and now start displacing higher. So now we want to go down to the 5 minute, and let's see what's happening at the 5 minute here. So we have a 5 minute change in state of delivery. We also have this fair value gap. So what would I do here is I would wait for the tap into the higher time frame PD array after taking levels of sell side, which we then get the change in state of delivery. So now, after making it, I would wait for price to come back down. Price comes back down, respects the change in state of delivery, also respects this fair value gap. Then you can enter a long, placing your stop at the low, and now targeting opposing highs. Target this high right here. This is just under a 4-hour trade. Panned out in a matter of 2 hours and 50 minutes, which is not too bad because the entire time you were in profit. And then if you wanted to, you could start pushing for higher time frame highs. What does that look like? Come over to the 1 hour. We look over here, and we have these objectives. And we also have these objectives up here. Whoops, wrong tool. So we have this high over here. We can also mark out this high. Eventually this high. So if we come back over here, these objectives, if you were to hold this entire trade, which most likely wouldn't because we day trade, but if you were in a swing position, you could hold this entire trade for an 11R, or if you were to close it at market close, you would get at max a 6R trade purely based off of us coming down into a higher time frame PD array, where we then saw a lower time frame change the state of delivery and making our entry based off of that, expecting price to push higher. So that's the way that you can fractalize and come to the markets every single day and mock up a trade setup as long as it goes with the bias. It's going to take some work to get used to be able to finding bias, but with time, you guys will be able to find bias very easily and very consistently. And if you make an error, then you can go back and you can see, okay, so why did this happen? And then you can sit there and analyze it after you journal your trade, which you will do every single time that you take a trade. And you can go back to the markets, and without taking a trade, you can go through, okay, so how am I on the wrong side of price? What did price do here that I was not on side with, where price then pushed against me? Okay, now I'm going to learn from this mistake and apply it the next time that I trade to limit the losses. A lot of the way that, most of the way actually, like 99% of the way that people become very successful at trading is because of market experience, because we're used to being in these markets day in and day out. We could see how they react off of price, off of everything I taught you. And now all we need to do is just wait for a certain thing to happen, and we click that button, and it either delivers or it doesn't. If it doesn't, okay, we learn from it. If it does, okay, cool. So now you guys have the very basic blocks of creating a trade setup, and now you could even use this in back testing, paper trading, forward testing, and whatever else you'd like to do. So there's a few points that I want to hit before I close this video. So with this knowledge, now you guys can go into the markets, analyze price, and see where and why you would take your entries. What I've taught you is the change of the state of delivery model. I'm not telling you guys you need to follow that. I actually want you guys to go and research and find a model that suits you along with your personality and go off of how you perceive the markets. Trading is a very personalized thing. Not everything that people say to you is going to work for you. It may work for them, but it might not work for you. If the change of state delivery model works for you, great, you can use it. If it doesn't, nothing against you. And one more thing, I also want you guys to prioritize risk management and psychology. You guys need to stay disciplined, focused, and patient. And you need to prioritize risk, because risk is what is going to get you far in trading. If you can manage risk, you're 90% there. 10% technical analysis. As if you can do that, risk management and psychology, those go both in hand. If you guys can do that, you're so close to printing money off of these financial markets and exploiting them. It's not even funny. All you need now is your model that suits you and market experience and a proven win rate, which you guys can get by back testing. I recommend FX Replay, fxreplay.com. You guys can check that out. And you guys can look at price daily. You could forward test. You could see, okay, where would I place a trade right now? Or do I need to wait for something to happen for me to place a trade? And once you get some consistency with that, you can then go and trade live. Now, that is not financial advice. I'm not going to be financially liable for anything that happens to you, for your losses or anything, but that is completely up to you. You guys are one step away from changing your lives. All you need to do is apply the things that I've told you and work at it, work hard. You guys are definitely going to hit some brick walls along your trading journey. But you take losses as lessons, and you just want to just be like a sponge. Just absorb as much as you can day in and day out. Really analyze the markets, and you guys will be able to make money. So thank you guys for watching.